Are we having fun yet? Hey, Courtney Smith here with our weekly Wall Street winners. Man, have we been seeing some good volatility here, or maybe not so good volatility. And this, of course, is highly non-volatile. It's the same every single week. All right, let's take a look at the market. Obviously, we had the plunge-o-rama. We've now had the spike up, and if you look very closely, there's what's called an island reversal here on the S&P 500. So what we have is we have the gap down about a week ago, and then 2 days ago we had a little mini gap up. And that leaves kind of an island of 3 bars down at the bottom, and that's why it's called an island reversal. And it is a bullish formation. But before I give you what my conclusion is on what the market's going to do, let's take a look at more of our indicators, and it'll make more sense. But we had the sharp move down, and we've had a little teeny short, sharp move up, and then on Friday, we kind of gave back a little bit of that. Dow Jones, same kind of price action, but if we look in the upper right-hand corner, we see that the selling pressure is down sharply. That's the red line. And we see that the buying pressure is up a bit, but they're still a long way apart. There's still a lot more selling pressure in this market than there is buying pressure. Okay, so that gives us clue number 1. NASDAQ, same thing. Here you can see the island reversal much clearer, right? You can see the big gap down and then the little gap up a day ago. Also, notice that the purple predictor is going up at a faster rate. So that's a bit bullish there. So we got the island reversal that's bullish. We have the purple predictor that's bullish over here on the NASDAQ. Our seasonality is actually, well, I'll show you the chart here in a second, but our seasonality indicator we've ranking as neutral, and we're in the period now where the seasonal bearishness is now over. So the dip occurred perfectly according to the seasonal scenario. Now we're in a period that should be sluggishly moving higher. And to me, now that we're on this chart, I think that makes a lot of sense. In other words, what we're going to do is, and let me go back to the S&P. What we should do based on the seasonality and some of these other indicators, the indicators are generally kind of a mixed bag. But it looks to me like we should grind higher because of the seasonality and get up to over 3,000 on the S&P again, all right? But not make a new high. If you look at the seasonality, and I'll go back to it in a second, we should grind higher, just barely creep higher for a couple of months. Really until September. Okay, we'll go back to that in a second. But the thing is, there's nothing here that's saying, hey, this is going to be an explosive bull market and we're going to go make new highs. There's nothing that says that. It's just saying we should grind higher. I think what's going to happen, now let's go back to the seasonal. You can see that towards the end of September, so in about 6-7 weeks, we should peak out again. So here's what I'm thinking. We're going to rally back up towards the old highs, get up maybe to 3,000, but not make new all-time highs again. And then that failure will fail to make new highs and will come down sharply again into that late October low. Because of the failure. We failed up at the top. You're not supposed to rally up for several weeks and then fail. You're supposed to make new highs, but we're going to fail. That'll cause the dip into the October lows, and then the real next leg of the bull market will continue up into the end of the year. Now, next year, I'm getting more and more bearish, and all you fully paid up members, you know what I'm talking about, but even the freebies here, let's carry on. This is the reason I'm still getting more and more bearish. The yield curve on the right-hand side has now been below 0 for 3 months. There's never been a time in American history where the yield curve was negative, that we did not have a recession and did not have at least a 20% bear market and probably a 40 or 50%. On the left-hand side, you can see that the yield curve is flat. It's actually negative until you get out to like 20 years and 30 years. That's the only interest rates that are higher than the short-term interest rates are way out at the long end of the yield curve. But the indicator on the right says big bear market, probably early next year. Asset allocation, which had gone into bonds like crazy. We did get a little bit of a snapback this week, but really nothing significant. Our riskicator, they don't want any risk. As we saw in the previous chart, they're buying bonds like crazy. They're also buying things like utilities, consumer staples. They're running for cover. They don't want risky assets at all, and that's bearish for the stock market. Global shares actually performing worse than the American shares. Bonds, though, this is where they're putting a lot of money. So you can see we've got a couple of gaps going up. Friday was a little bit of an unchanged day, but notice Friday, Thursday, Wednesday, and Tuesday, we all closed at basically the same price. So there's a hidden consolidation going on here in the bond market, and I think it's going to be broken to the upside. Look at the purple predictor. The purple predictor's above the price action, which is bullish. So look for bonds to continue to move higher. Bond key factors, all of them are telling us that bond yields are going to be lower except gold. Gold is pointing up, but it's the only exception. The others are saying look for lower interest rates. The dollar really consolidated this last week after the big breakout that occurred the previous week. Gold, I'm more and more bullish on gold all the time. What can I say? I think this stuff's going far, far higher. So I'm long gold right now. I'm long silver mines. I just got to be long here. This is where the action is. Our gold key indicators, you can see, have turned much more bullish from last week. The top one is now clearly bullish. Our middle indicator, the CRB, just had a hook up. Not enough to say that the trend has changed, but still supportive. But look at the green bar in the bottom. That thing is skyrocketing, and that's the one that's dragging gold higher. Gotta be long gold. Now, crude oil, I think we're going to continue to drop down into the lower 50s. The more I look at the fundamentals, the more I see reduced demand and increased supply. That's not good for the price of oil. Now, if we stay down in the low 50s, we may start seeing the Russians and the Saudis cut production, but they're not feeling enough pain yet, so we'll have to see. And Bitcoin is slowly grinding higher, but as you know, we got out of our position before. I guess I'm a little bit, I was going to say a little bit neutral, but I think I'm just neutral right now. I can't get excited about either being long or short. We made like 400% on our last trade, so that's pretty good. I think the best thing to do right now is to do absolutely nothing and let the market come to us. Let it tell us what it wants to do. And right now it's telling us we're at the same price we were a few months ago. In other words, it's not a trending market anymore. So best thing to do is to stand aside. All right, here we go on our stock financial freedom. There's only 2 more for the rest of the year. We're not doing any more stock financial freedom systems. So the last 2 are going to be in Los Angeles in a couple weeks, and then Las Vegas in September. That's it. No more. Our masterclass for stocks is going to be in Los Angeles in October, and that's it. We're not doing the masterclass anymore. On the option side, I'm actually in the middle of doing the Option Success School. We got a great group of people here. We have only 1 more this year, and that's in Las Vegas in September. Then we're not doing this class anymore. And our master class of options will be the week after the master class for stocks. So come and spend the whole week and take the 2 courses. All right, our bear market course, the closer we get to the end of the year, the more important it is that you take this class. And of course, we got our little quick thing for $7, 7 tactics for $7. People are loving this thing. All right, that's what we got for you freebies, fully paid up members. Just hang on for a second.